Interest rates have doubled, buyers are exhausted. Is the Columbus real estate market ripe for collapse? Hey, what's up everyone? Andy Howe here, local realtor, lover of all things Columbus. You guys know I love making these videos all about Columbus, the cool things that are happening here, and letting you guys know what is exactly up with the 2022 Columbus real estate market. Are we going to implode? Is this going to be another 2008 type of scenario? Are interest rates going to keep rising? These are just some of the questions I get from you guys all the time with regards to the real estate market. So I want to take a few minutes in this video to talk about how I see the market as it is right here in November 2022. The real estate market's been on a tear for like 10 years. Well, most markets, stock market, any type of market. And it's easy to think that it's always going to be this way. That is not a reality. If you were a buyer in the market in the past couple years, especially the past 2 years with the pandemic, you know just how crazy it was. If you wanted to buy a property, you had to know that you're going to be competing against probably like 20 different other people that also wanted the house, and you had to rise to the top and give up all your contingencies, make a crazy over list price offer even to get the house. And I gotta tell you, as a realtor, it was hard for me to suggest that my clients should make the offer that would allow them to get the house, because it was just so frothy, it was so crazy. So things were way out of skew the last 2 years and ripe for a correction. We're starting to see that a little bit here in Columbus, and I think nationally as well. We've got a lot of headwinds, macroeconomic headwinds across the country that are really affecting all markets, including real estate. First of all, we have a doubling of interest rates. Second of all, we have a debt bubble with corporate debt. We've got government debt, and we just this week hit a record for consumer debt, revolving debt, almost $1 trillion we've all borrowed. So we've got raising energy prices, we've got raising food prices, we've got the Russia-Ukraine war, we've got the China economic collapse, we've got the worst performing bond market since 1788. The stock market is way down. Housing is starting to crack, so the wealth effect is kind of going away a little bit. We've got an inverted T-bond yield curve. And what that means, essentially, it's a great indicator, first of all, for recession. When we see the yield curve invert, typically a recession is going to follow. What that means essentially is a 10-year T-bill will typically pay more as an interest rate than a 2-year T-bill. Well, right now that's flip-flopped. A 2-year, because of all the uncertainty right now, actually pays more than a 10-year. So all these reasons, all these factors are playing into where the market is right now. And as an agent, as a professional, I do think that the top of the real estate market is in. I think we've been in this extreme seller's market, like I mentioned. We are coming to a little bit more balance between buyers and sellers. Here in Columbus, we still have under 2 months of housing inventory. 6 months of housing inventory is said to be a balanced market between buyers and sellers. So still an extreme seller's market. Wanted to dig into two things that I think are really affecting the market, and that's interest rates and inventory. So interest rates have doubled in the past year, and this is so critically important with real estate because it really affects people's purchasing power, ability to qualify for mortgages, ability to actually pay their mortgage payment. Quick example. If we were standing here a year ago, buying a $400,000 house here in Columbus, putting 20% down, your mortgage payment, including taxes and insurance, would be about $2,300. Well, with interest rates having gone the way they have in this past year, that same $400,000 house with a 20% down payment is now going to cost you about $2,800 a year compared to the $2,300 a year ago. That is an 18% increase. That's a huge hit to families' bottom line, their disposable income. And it's not just on housing. We're seeing these cost increases, as I mentioned, on gasoline, on food, on pretty much any line item in your monthly budget. So interest rates really have an effect on the market. Pay attention to interest rates with regards to the market. Talking to mortgage bankers, they'll tell you that they anticipate the rates to start going down at the beginning of 2023. I definitely have a different opinion. I think there is an almost 0% chance of rates going down anytime soon. I anticipate rates to go up all through 2023, maybe at a slower clip than the 75 basis point increases that we've been seeing, hopefully. The next thing that really affects any market is going to be supply and demand. Whether you're buying electricity, gasoline, ribeyes, whatever you're buying, supply and demand is going to be at the root of every market. When you have everybody wants something and there's not enough of it, prices are going to go up. Conversely, they're going to come down when there's a lot of something and not as many buyers. The past couple years, especially during the pandemic, the real estate market has had extreme inventory shortages. They're just, here in Columbus, we were down to like half a month worth of home inventory. Starting to see a few more homes hit the market now. And in talking to other agents across the country, I was just speaking with an agent out in Las Vegas. They were hovering around 2 months of inventory until this past month. They jumped up to 8 months of inventory that would put them in a buyer's market. Here in Columbus, we're still right around 1.6 months of inventory. That it has started to creep up. To give you a comparison between, where we are a year ago and to where we are now. Right now, there are about 5% more active homes on the market November now compared to last year. So there is a little bit more supply. What's interesting is that the new listings that have hit the market in October of 2022, there were about 20%, almost 20% less listings to hit the market compared to October last year. Kind of weird. Another interesting data point is the houses that went under contract in the month of October. It was down 60% compared to last year. So buyers, they're taking pause here. They're letting the dust settle a little bit. If you are looking to be a buyer in the market, I encourage you to take the next 6 to 12 months. I do think as interest rates go up, there are going to continue to be deals. If you're a seller, might not be a bad idea to consider selling now if your goal is to make the most money possible. In general, I think the real estate market across the country is ripe. It is due for a haircut. I think some places like Texas, like Florida, like Arizona, who had a lot of migration because people were, remote working, lower cost of living. I think some of those places, as the remote working goes away partially, the real estate markets are going to be hit more harsh. I do anticipate a 20% haircut in some of those places. But Columbus, I think the most likely scenario is that we're going to flatline. We are still 22% lower cost of living compared to the national average here in Columbus. There are a lot of jobs around. We've got Intel coming to Columbus. They've already broken ground. They're scheduled to be online with their first fab of $20 billion investment in the area at the end of 2025. There is a lot of activity going here. I don't think that we can reasonably anticipate here in Columbus seeing those 10, 15, 20% price appreciations. I do think we're going to flatline and also fare much better than many of the other places in the country. That's my opinion. Let me know what you guys think is going to happen with the real estate market. Nobody has a crystal ball, including me, but I'm curious what your thoughts are. What rang true to you? What made sense to you? Where am I way off? Thanks for watching, guys. If you have any questions about the real estate market, more detailed questions, feel free to reach out, drop me a line, shoot me an email, send me a text. Thanks for watching, guys. Have a great day.